Good morning and welcome to Trading the Trend on Wednesday, the 11th of January. Last week's trade was to go long the Australian dollar versus the US dollar on the news that China was going to stop its 2-year import ban of Australian coal. And also from a technical perspective, as we can see here on the daily financial bet on the daily chart here, is that we rose for the first time since April of 2020 above the red line here, the 200-day simple moving average. And that led us to go long the Australian dollar versus the US dollar. And we did come off a bit after putting the long trade on, but we stayed above our stop loss level and are now trading above the red line again, the 200-day simple moving average, and thus expect further upside to be seen on this currency pair. Today's trading, the trend is to go long the euro versus US dollar, so another short dollar trade, but we would like to buy it at lower levels just in case that tomorrow's US CPI data in the US surprises market participants and pushes this currency pair lower again. And also we want to reduce the potential risk because we already have a short dollar trade on with the Australian dollar against the US dollar long position from last week. So here we would like to buy at 106.40 with a stop loss below 104.40, below this key support area which held last Friday, and an upside target if we go on the weekly chart at 111.40, taking us back to levels last seen in November 2021 and March of 2022. But as you can clearly see here on the weekly chart, we are now trading in an uptrend and have been doing so since October of last year and expect this to continue in the days and weeks ahead. So today's Trading the Trend is to go long the euro against the US dollar at 106.40 with a stop loss at 104.40 and an upside target of 111.40.